Hi and welcome to Ashwini Trading Academy. I am Ashwini and I'm so excited to have you here with me on this journey. If you are new to stock market and feeling a bit unsure where to begin, don't worry. I'm here to guide you step by step, starting with the basics and working our way up to more advanced strategies. Whether you are someone who is looking to trade confidently or simply understand the market better, this channel is all about making trading simple, easy to understand, and most importantly, something you can enjoy while learning. So, if you are ready to learn and grow with me, hit that subscribe button and let's get started together. Have you ever wondered who controls the stock market? How stock market really works? How does the price of the stock moves? Who are the regulators? Who are the exchanges? Then this video is for you. I will be explaining you all this in detail and let's get into the video. So, the first question is, who regulates the stock market in India? Which means who controls the stock market in India? The answer is SEBI, which stands for Securities and Exchange Board of India. SEBI was actually established in 1992 with the primary goal of ensuring that the stock market in India operate in a fair, transparent and efficient manner. Now, think SEBI as the watchdog of Indian stock market, keeping an eye of everything to protect investors and maintain trust. Now, let's break down the key role of SEBI in regulating the stock market. SEBI's main role is to protect investors. SEBI works to prevent fraud, manipulations, and other malpractices that can harm investors. It also ensures that investors' interests are safeguarded and that everyone gets a fair deal in the market. And the next one is SEBI monitors brokers, exchanges, mutual funds, and other intermediaries to ensure they follow rules and act in the best interest of investors. This keeps the market clean and ensures no one takes advantages of you. SEBI also enforces laws related to financial disclosure and ensure that companies comply with all necessary regulations, giving you confidence that the companies you invest in are transparent and trustworthy. As you know now, who controls the stock market? It is SEBI. Now, let's talk about the exchanges. In India, the stock market operates through two major exchanges. One is BSE, which is Bombay Stock Exchange. This is one of the oldest exchange in Asia. BSE is where you can buy and sell shares of company listed in India. Now, the second exchange is NSE. NSE is also called as National Stock Exchange. NSE is the modern exchange known for its electronic trading system, and it is where most trading takes place today. Now you know who regulates the stock market. It is SEBI. Now, let's talk about the exchanges. In India, the stock market operates through two major exchanges. The first one is BSE, Bombay Stock Exchange. It is one of the oldest exchange in Asia, which is founded in 1875. It is where you can buy and sell shares of company listed in India. BSE is closely associated with Sensex, which is the benchmark index of the exchanges representing the performance of 30 of the largest and most actively traded companies in India. Now, coming to NSE, National Stock Exchange. This is the more modern exchange. It is known for its advanced electronic trading system that allows for faster and more efficient transaction. NSE is where most of the trading is happening today. The NSE is associated with popular indexes like Nifty 50, Bank Nifty, Nifty IT, Nifty Pharma, etc. When we are talking about Nifty 50, it tracks the performance of 50 major companies listed on the exchanges. And Bank Nifty is listed with only banking stocks. I know you will have a question. What exchanges actually do? Correct? Okay, let me answer to you. Exchanges create a secure and organized platform where investors like us can buy and sell shares, bonds, and other financial instruments easily and transparently. They also ensure that the prices of the shares are determined by supply and demand in a transparent manner so everyone trades at a fair market price. The next one is, it makes it easier for investors to sell or buy shares whenever we wanted to invest or whenever we wanted to sell. Exchanges will monitor and regulate all our transactions to prevent fraud and manipulation. They work closely with regulators like SEBI, and they manage index like Sensex, Nifty 50, Bank Nifty, which will help investors track their overall market performance. Now, companies can list their shares on exchanges through the initial public offering, which is also called as IPOs, to raise funds for growth and expansion. As you know about the regulators and exchanges now, let's learn about how stock market works. The stock market operates on the principle of demand and supply. When company needs fund, they issue shares via initial public offering, which is also called as IPO. Once listed, shares can be traded on exchanges. Buyers and sellers will place their order on the exchanges. Investors place buy or sell orders via brokers, and exchanges match these orders using advanced algorithm. As you know now, what is regulators, who are exchanges? Now let's learn what is stock market. Stock market is like a marketplace where people will come to buy and sell shares of publicly listed companies. When you buy a share, you are purchasing a small piece of that company. As the company grows and becomes more profitable, the value of the share increases, allowing you to make more profit when you sell it. Now, why do you need to invest in stock market is your next question, right? So, the answer is to grow your wealth, to beat inflation. Investing in market helps you keep your purchasing power intact as price rises. Also, investing in stock market will help you achieve your financial goals, whether it's for your retirement, a dream vacation, or your kids' education. The stock market can help you reach those goals faster. The stock market is just not for the rich people as everyone thinks. It is for anyone who is willing to learn and start small. Even with as little as 500 a month, you can start investing in small companies. So you can begin your journey even with 500 rupees per month. In our next video, we will talk about the top 5 mistakes beginners make in stock market. And trust me, avoiding these mistakes can save you from losing both money and confidence. So what you have to do now? Hit the subscribers button and turn on the notification bell to make sure you don't miss the next video. Let's learn and grow together. See you in the next video.